Good morning and welcome back to day 2 of IFX Expo Asia 2025. We often hear about winning trades and perfect models, but what about the ones that blew up? In this brutally honest section, we will explore mistakes and lessons from trading your own capital, challenges, and how to learn from losses. To kick things off, please join me in welcoming our moderator, Santiago Valencia, the Chief Partnership Officer at Swisset. The floor is yours.
Hello everyone. Before we start, I just want to congratulations to the IFX team for a fantastic event. I hope you are enjoying it, connecting with the right people. Today I'm Santiago, the CPO of Swisset. At Swisset, we help brokers, prop firms to increase, retain, and engage with the traders community, right? Today, I'm so glad to share the stage with our iconic, authentic, and fantastic industry legend, that Tom Higgins, that he is very well known for two things. First of all, his vast knowledge for the industry that have been shaping the business 20, 30 years. To be honest, secondly, for his having the best style of the industry, as you can see. So please welcome Tom to the stage.
Well, thank you very much, Santiago. It's lovely to be here too, and I do like coming to Hong Kong. I've missed it. I haven't been for 6 years, but I love the place. There's something very special about the sort of madness and excitement and entrepreneurial spirit of Hong Kong. So it's fantastic to be here, and it's also very nice to see the show being so well attended and so sort of large again. It's great to be back here, and this is a very interesting subject, talking about prop, because it's an important part of our business now.
Yeah, totally. So as the couple of years, prop now is a really big space in our industry, right? As you know from your background, it is a lot of things that people will like to know how to succeed in this prop space. And I think we can start from describing how will be those important components for a prop owner to have a successful business.
Well, first of all, I wanted to talk about the history of prop trading, because the term if you take the wider FX industry, actually means something completely different. If you talk to institutional people, prop trading means something completely different. It's proprietary trading, which just basically means trading with your own money. So it means your firm is not trading with client money, you're trading with your own money, and it doesn't have challenges and funded accounts or any of that stuff at all. But actually, it's probably more related to the original trading arcades in the 80s and the 90s that existed in Chicago, New York, and in London. And what they were a room, because you didn't have remote access to trading rooms. So you had a room in not that large, with maybe 30 or 40 terminals in it. People would go in there and then they would learn to trade and if they could trade okay, then they were allowed to trade the money of the firm, which is basically exactly the same as the prop model. So fundamentally, there's absolutely nothing wrong with the prop model. It's a very good way of people learning to trade through education, and if they can trade and they can prove that they know what to do and they're not useless, then why not do a profit share with them, and they can make money and the firm can make money too. So fundamentally, it's a very good idea. The problem that we had in this industry when it came in here is a bit like binary options. It was full of scammers, and there was all sorts of terrible firms coming in and tarnishing the industry. But I don't want people to think that prop trading is therefore bad because of that. Yeah. Every new thing that comes along has a bad element of people that hopefully then go away because they don't succeed. And what you're left with is the cream of the business, which is the really good stuff, which is where we all come in. So I sort of want to start that as a background. Now, the sort of components that we need to think about there's really 3 parts. You've got the trading platform, which could be MetaTrader 5, it could be DevExperts, it could be Trader Evolution, it could be all sorts of different front-end trading platforms that need to be extremely high performance, because the number of transactions you will do is absolutely enormous. We've got one doing 5 or 6 million transactions a day just for one prop firm. Then you need to have a CRM system that's managing the whole of the challenge, the funding, and monitoring absolutely everything so that you know where you are, because your trading platform is not going to do that. And then you need the last component, which is our part, which is all the liquidity and the execution part that is simulating a full A-book execution. So those are the, and going to A-book if you are going to the liquidity providers when you're in the funded stage, if that's what the prop firm is doing. So those are the three components.
Yeah, totally. As you said, that it is having that curve, right? That we now is jumping more institutional entities into the prop space. What do you think for those brokers? What do you think for those entities that is jumping into the space?
Well, if it's the larger companies, as long as they take it seriously and take it properly, and they don't just try and launch something scammy, which is, you're not really seeing so many of those now. You're seeing much more of the sensible grown-up ones. Then I think that it's a very sensible model, because it should be all about educating people who don't know how to trade. And if they learn to trade and they can trade, then why not then help them on their trading journey? Because of social media, which is one of my, I don't particularly like social media because of my age, I suppose you could say. I didn't grow up with it. And I've got 4 children of teenage age and older in their 20s, and so they'll say to me, "Oh, my friends tell me just buy and sell crypto, you'll make a fortune." And I say, well, the best way to make a fortune is not to buy and sell crypto or buy and sell anything unless you know what you're doing, and you almost certainly don't know what you're doing. But if you go and get some education and some technical analytics training, and you do know what you're doing, then it's a bit of a different game. So I think if one of the larger brokers, for example, so I wouldn't see any proper institutional companies, so the scale of businesses outside of this show will not be doing prop trading. Their proprietary trading will be completely different. They will never do challenges, they will never do funded accounts. But what they could do is they could go back into their trader arcade type business again, where they have professional traders that they are taking through this journey onto proper professionally trained traders rather than on the retail side. I'm not really seeing that yet, because it is a very, very different market.
Yeah.
But certainly in the retail side, I mean, it's incredibly popular.
Coming back to the retail side, right, as you said, there's a lot of prop space, a lot of prop challenges over there. And one of the biggest mistakes of the traders, it is they don't know how to choose the entity or the really good prop that is going in the right way. How do you think that they can identify that good entity, a good prop?
Yeah, that's a good point. But it's like, I guess it's like buying anything. Do your research. Look online. Look at the reviews that people have. If it's too good to be true, it is always too good to be true. That is one of the most important statements ever. If someone's promising you're going to make a fortune out of this, you're definitely not going to make a fortune out of this, because that's not true. It's always worth doing that research. And I would go with a name that is known, and rather than just something that's popped up and sort of promising the world. It's really important for the prop firms or the brokers that are launching prop firms to make sure they do have the right components as well, because the experience that the traders have in their challenge part, where they are learning to trade and they are being tested in a simulated environment to see whether they know how to trade, has to be very, very similar to trading in the real world, as if their trades were going to the market, going to a book. And so that's where our software comes in. And so rather than just sort of executing at the top of book that a lot of people would do straight with their trading platform, they need to be able to make sure it looks exactly as if they were going to a liquidity provider. So with variable delays and latency, as if you would get on a network in the real world across the internet, with different slippage, with different multiple fills, rejections, to simulate as much as possible as it's going to look like. That's really the only way that you're going to be able to really test people, to make it look very, very similar. I guess it's like driving in a simulated racing car before you are allowed to drive in a real one. You can crash it quite a lot of times before you hurt yourself.
Yeah, totally. And I think one of the bigger mistakes as well that do traders is they don't do the proper research about the entity, about the prop, and they don't understand as well the challenges, right? Because sometimes those props have from the challenge from the funded account are those different relationships, like those different rules as well, so they really don't understand. And the other thing from the trader and the prop owner is the risk management. Risk management, I think, is a huge component on the successful from the trader and from the prop owner. How do you think that? How do you see that risk management way to manage?
Yeah, so from the brokers or the prop firm's point of view, managing the risk once they get outside of the valuation stage is really important, because then they're a real trader, and it's the prop firm's money that are at risk.
Yeah.
So having a proper risk management tool, which can be part of the CRM, and it can be a separate product. We have a separate product for that, but it's often part of the CRM tool, the prop CRM tool that's monitoring the risk for the broker is absolutely vital, because at that point, you are risking the capital of the prop firm. One of the things I think that traders need to be aware of in the prop world is the scammer prop firms you'll never really pass the evaluation stage, because when you're doing your challenges, they just want to make money from each challenge. So you'll just keep more and more and more challenges, and they'll keep collecting their $50 or $100 for each challenge or whatever they're going to charge. And they might have 100,000, 200,000 people doing this, so they're making an absolute fortune out of the challenges, and they never really want you to go through to in the risky part if they're not real firms. If they're real firms, then the challenges are really to properly test you. So if you never pass the challenges, there's something wrong probably, unless you're a really rubbish trader.
That's true. And I think that's what is happening now, that for a bit longer in this space, right, this is risk management. Right, that those entities or those props that really focus on the risk management, to really focus how to find those proper traders. How do you think, from the risk management perspective, what is the important part or the important behavior that the trader does to the props knows, okay, this trader is a really good and we should fund it with A-book money or all that stuff?
Well, at that point, it's really about analytics. So they will have big data analytics looking at all of the trading activity of the traders and looking at how profitable they are, how they behave at different times, how they behave over numbers being announced, news announcements, and to see whether they have too much emotion in their trading or whether they're more of a technical trader. Because what you don't want is someone who's emotionally trading and reading something in the news and reacting directly to the news, and not knowing when to close positions and not knowing when to take losses and realize their profits and things. So they need to be able to follow the education that they've learned in a calm and controlled manner, and see this as not a jumping up and down and getting overexcited about trading, but actually doing it as a job effectively. And so that's why I think the education is so vital in this, is that they teach them to be traders. So you wouldn't expect an incredibly high percentage to go from evaluation to funded, because most people, if you took 10 people in the street, most of them would not actually be able to be very good traders, because it's a difficult mentality to being a successful trader, which is why if you look at the retail brokers' websites, certainly in the UK under FCA, they have to say at the bottom the percentage of people who lose, and it's mostly 80%, things like that. It's high numbers, because most of them are not educated and don't know what they're doing. But those who do have a much higher chance of being successful.
From the risk management perspective, when you find a good trader and you start funded with different capital, how do you think that, or how you recognize that trader could start trading like more and more capital from 100K to 200, 500? How do you think?
Again, it's the same sort of analytics that you would do on your platform. Our risk management platform looks for certain types of trading activity, which would be either positive or negative, and so it will automatically scan for things that it could be looking for toxic type trading if you're a normal broker and you don't want that to go to your liquidity provider, or it could be looking at the profitability, and you can sort of click on somebody and look at their trading style, and it'll analyze and say, okay, this is their trading style over certain periods. So if you see the right sort of things that they're doing, and it's again a much more technical analytics way of them trading, and when you see a news figure, you see how they react to it, and you see their profitability is more than 50% of the time they're making money, then they're successful. If they're losing most of the time, they're probably, well, either the prop firm is skewing the prices for them to make them lose, which you do see, because we have been approached by people who ask us to provide execution that will make sure that the client always loses, the trader always loses, which of course we will not do, because that is wrong and immoral. But we do get asked by some firms to do that, and we say, well, surely you measure their profitability once they're funded, and if they start making money, you skew the prices so that they don't make any more money, which is illegal and wrong, but it is unfortunately done.
Oh, okay. So from the owner perspective, what do you think that is the biggest mistake that they are doing it, and why they're not growing it on the prop?
So one of the things I think that prop firm owners don't, if they're new to it, they might not realize is the size of the business and how many accounts they will have, and how much activity the traders will be doing. It is significantly higher activity than you would get in a brokerage when you're in the evaluation stage, which is, it is ironic really, because the evaluation bit you're not making much money from apart from the evaluation fee, but your technology you need for that part has to be enormous, because you might have hundreds of thousands of people trading millions of times a day. So you need incredibly fast trading platforms, incredibly responsive liquidity management platforms and risk management platforms to be able to cope with this incredible demand that if you were a brokerage would be doing yards and yards a day, but in fact is not earning that. So you need to have the ability to have this incredibly high performance system so that you can accurately get through people to the funded stage, which I think people don't always realize. So they add prop to their existing platform and it can't cope because they haven't scaled it enough. So if we're looking at, say, Tony's here from MetaQuest, so I can talk about MetaTrader. If you're putting it in your rather tired and aged MT4 and you're adding hundreds and hundreds of thousands of users to it, you're probably not going to cope because it's already probably maxed out with your brokerage. But if you're looking at something scalable like MT5, or you're looking at some of the other platforms like DevExperts, which can scale linearly, then you're in a much better place because you can scale your platform up as you want to, and you want something that is, from a technical point, say multi-threaded rather than more single-threaded like MetaTrader 4. So you need to be able to accept that you're going to have to scale your platforms really quite substantially.
That's true. I think will be the most important part, the lack of education from the prop owners as well, that is coming to the space without really good knowledge about brokerage and all what you need from the technical and the fundamental side of the industry as well. Do you have, as you have some clients, of course you don't disclaim the names, any lessons that they have been learning in this journey from the prop, that they have making some mistakes or something that you want to share with us?
I think making sure that they got the executions they're doing are simulating the real world very well is something that I've seen people not do. So they think they can cut some corners, not have a proper liquidity management system and just execute at the top of book. That's a big mistake because that never simulates the real world. The other thing is they need to look at the assets they're going to cover, because often it won't just be FX. They'll want to have something a little bit more interesting. So cryptos, we've got a lot of our business is in the institutional crypto side, but also the prop crypto side. So we've got quite a few prop crypto firms and prop firms that are multi-asset. So I would say have a think about which asset classes you're going to let your prop traders have a look at, because looking at the top coins in crypto as well as having FX CFDs indexes is really interesting for them, and it differentiates you from just someone who's having majors in FX. If you've got some indexes and some stocks or just some actual stocks as well, it makes the whole thing a bit more interesting. The good thing about having the crypto coins is they're nice and volatile, and so therefore they're quite good to test people on their sort of trading style.
Would you recommend to start, will be more focused in one asset class, or be more multi-asset class for a prop owner?
I think nowadays it's quite easy to be fully multi-asset class.
Yeah.
I mean, our MatrixNet liquidity management platform is fully multi-asset, so it's incredibly easy to start with all of those different things. You just plug in the particular asset classes that you want. So there's hundreds of FX feeds and crypto feeds from exchanges and market makers and all that sort of stuff. So it's extremely easy to add that straight away. So I can't see why you would necessarily start with something very basic when the barriers are not there, and you'll get a better edge in the market if you've got a more interesting offering.
From that perspective for the trader, have you seen like better results for those traders that are just focused in, for example, in crypto than the CFD or Forex, or what you see from them?
Well, I guess it depends where they've come from. If they've come from the pure play crypto world, they'll probably just have crypto, because their sort of audience, it's more of a religion. Some of the early pure play crypto people, they don't believe in anything else. The Bitcoiners of the world they have a different thought process,
yeah.
And that's fine. That's just where they come from, and so they probably wouldn't want to have FX. Whereas if you're coming from we've been in the business 17 years, so obviously we started FX because crypto didn't exist then. Then we're more experienced in multi-asset because we've always had gold traded and silver traded, so they're always traded as almost like an FX product. Commodities, oil, it's very standard to have those on the platform. So indexes as well. Single stocks, again, quite popular. Not everybody's doing it, but single stocks are definitely used by a lot of people. So that's sort of more experience. But the pure play crypto stuff will probably not add that. Saying that, we're actually seeing the pure play crypto exchanges starting to talk about adding FX products to their exchanges, because they've got all the right technology to be able to trade any sort of instrument at all. So why would they not add FX? And I know Kraken and OKX are very much looking at that area too. I mean, Kraken have started buying up prop firms because they think this is an interesting area. These big firms with Ripple buying Hidden Road example as well for the prime broker world. There's a lot of sort of coming together in this area between traditional finance and crypto finance.
Talking that topic, how do you think it is from the future for the industry? How do you see it?
Well, it's not like binary options, which to me was always a scam. I don't think anything good came out of binary options. There may be one or two left in the world, but I don't know of any. This is different. Once you weed out all of the rubbish, there is, like I said about the original trader arcades, there's fundamentally absolutely nothing wrong with educating people how to trade, monitoring them, and then taking them through into the prop world. So I think it has got a permanent space here, and I think the mindset of the Gen Zers or Gen Zers, as I'm probably supposed to say, is to see something new and learn it online and try it, rather than not do things that they've not had a background in. So I think that's why it works very well, because the current generations coming through, it appeals to the way that they want to work. So I think it's got a good interest. That's why the sort of crypto stuff was very, very popular with young people too, because they could all just try it. I mean, most of them lost their money doing it because they didn't really have the education side of it. They just they just played with it, if you like. Yeah. But I like the education part of this. I think it's really important.
And talking about the education, do you think that the education part will become from the prop side, or will become just genuine interesting from the trader as well?
I think the regulators around the world will probably start to realize that this is not going away, so they need to regulate it, and they will insist that you manage it properly and that you do educate the people in the first part to get rid of the scammy part of it, because it has fundamental value if you do it properly. And
some props they have from their own risk management tool and everything, but they don't give to the trader like some tool that the trader can understand what they're doing it, what they are, the analytics that they are doing it. What do you think about that as well?
Yeah, I think it's very common that the trader doesn't really get much analytics. Actually, it's normally done on the prop firm side. I think they probably should get more, so that they can get feedback on their trading style to see how they did and why they did, and a full analytical sort of dump of how they were trading and what they could do better. I mean, that would be great. I'm not I'm not as up to date on the prop CRM platforms that can do this. So maybe your platforms can do this, but I think it's a really good idea if they can.
Yeah, that's what we're doing. Okay, that's great. I don't know if we can pass to the public if they want to do some question or something, taking advantage that we have this legend sitting here.
Yes. If you could say your firm as well, so.
Hello. Hi. Well, I don't represent any firm. I'm a trader myself, and I guess I do it as other things I do besides it. I'm educator, so.
Good to hear that.
Thank you. So I've been trading for like 5 years, and I would say like this last year I've been consistently profitable, and I guess I want to hear from you, like, if you would look for someone who is interested in doing it more seriously than just start opening up the account, doing it for himself, like working for a firm, maybe prop firm, maybe hedge fund, whatever, taking it more seriously. Which aspects of my trade I should showcase, and what metrics people would look for?
Yeah, so I'm probably not the best person to answer that because I'm very much on the technical side of the liquidity management part of it. But from my background in institutional markets, that's where I think would be an interesting place for you to go, because if you go to a hedge fund or a small hedge fund type company and say, this is how I trade, this is my success, this is my history, this is the analytics that I use, this is if you're a technical analyst trained or that you've got qualifications in that, and show your portfolio of trading and show your history and explain your psychology of when you open, when you close, and how you run everything as a sort of dialogue with them, and say, I believe that I can be successful trading in your business, and this is why, showing my history. I think that's very interesting, and that's quite an interesting jump from doing it in the retail world, where you seem to be on the edge of actually going into this as a proper career rather than doing it as a thing on the side. So I think that would be good. That's probably a slightly different market to sort of the people here. Now, there are firms that will take professional traders, proper professional traders, rather than just people who are players. But you need to sort of pick the right one, and it would tend to be the larger firms that would have their professional trader division. So I know some of our broker clients have a professional trader section where they have some they'll have a high net worth individual section where they have their own traders that trade for them, and some will actually just employ people like you who will trade the firm's money too.
All right, thank you very much.
So good luck in your trading. It sounds like you're doing very well.
Thank you so much.
Any other question? No. Okay, guys, thank you so much for being here, and thank you to Tom for all the info and insights that you give us, as well as good as always. So thank you so much.
Thank you very much for coming. Thank you, everyone.